We're now joined by Vineeta Sharma, the head of research at Narnolia Financial Advisors. Thanks so much for joining in here on Business Television India. First off, before we talk about the positives, before we talk about the negatives, let me ask you about what you're making in terms of the kind of depreciation we've seen for the rupee so far. 13.5% lost from the start of the year. Of course, if we compare it to these other emerging market players, not quite as bad. We're about middle of the pack. But in terms of Asian currencies, it's quite a bleak picture. What are you penciling in really in terms of where you see the rupee going from here?
See, Nivrita, if you look at rupee, in the last 4 years, rupee has almost traded in a range. So it was trading around 63 to 68 $. And if you compare it with the interest rate differential between world and India, so there is a 3.5% differential between the world together and India as such. So it is very much justified that we should have had a 3.5% depreciation over the last 4 years on a yearly basis, which has not happened in the past 3-4 years. It was almost in a range. And so I presume that this rally, rupee depreciating towards 72 and a half is very much justified. The rear had crossed 120 level. So according to us, we feel that this is sort of a justified. What worries us is the combination of rupee with the crude prices, because the crude is moving up, and that along with rupee will have a negative sentiment and negative impact on our current account deficit.
In fact, let me ask you about the crude. That's exactly the point. From the start of the year, there's already been a fair amount of concern in terms of how we are seeing the crude pan out. And now with the kind of depreciation, the rapid acceleration really that we've seen in the rupee weakness in the last month or so, that is the point of concern. So if you talk about the negatives then to start with, we'll get to the IT, we'll get to the pharma. What about OMCs and HP, BP, IOC? What really should we be bracing ourselves with when it comes to these players or any of the other energy players? What about an RIL, for example?
Okay, so look at this way. First, we should let us understand how the crude has panned out in the last 2-3 years. So crude is largely dependent on how the OPEC has been deciding on the production level or whatever. So earlier also from 40 to $80 when it has surged, it was on the production cut by OPEC, and the recent fall that you saw was again during June when the OPEC came out with news that they will be putting it more production into things. So that ways we saw crude cooling off. Recent crude rise again towards $80 was because of IA raising up demands. I suppose there are enough inventory, right. And if the crude crosses 85, it will bring alternatives into picture. So I suppose, the crude is at a level, I think 70 will be a more comforting level for crude rather than 90. So in that case, if you talk about IOC, BPCL, etc., so they'll have inventory losses going forward, and so there has been concerns, for a quarter or so. But I think even after the management commentary that we hear from these companies, we are of the opinion that 70 should be a good level at which the crude will again start benefiting.
All right, and that's in spite of the kind of weakness we're seeing on the rupee. Do you think that you don't sound very concerned, at least for the OMCs at the moment?
See, rupee as such, if I see, rupee will bother me only once the current account deficit crosses the level of 3.
Okay.
Right now, current account deficit is around 2.4%, the latest number right now, and it is, it was very much supported by the gold imports. The gold imports curtailed down. Foreign remittances are good. If you look at the NRE account, money flowing into. So there has been around $1.9 billion of inflow in the last quarter. So that gives comfort. RBI has good forex reserves with this. So crossing 72 and a half is sort of comforting for me, unless until the current account deficit crosses the level of 3.
All right, so that's the point to watch. What about these other crude exposed areas? So if you talk about paint stocks, for example, and Asian paints, Berger, Kansai, Nerolac, any particular view that you have in light of the kind of rupee weakness that we're seeing?
Yeah, so Asian Paint has some international exposure also, and obviously once the crude comes into picture, so margins definitely get down. And for these paints companies, they are more on the consumer front. So it's very quite comfortable with Asian Paint to pass on the kind of rally that they witness in the crude and the rupee front. So it's little easier for them to pass on the pains. And also with the kind of volume growth that the Asian Paint is coming up, we suppose the profitability on the growth side will not be impacted.
All right.
So we are positive, though valuation run up, you can say, okay, the valuation is little on the higher side. But I suppose that looking at the growth, the volume growth that has set in, which was for the past, for the past 1 year, the volume growth has not been quarter on quarter. We have seen not very good volume growth coming forward. But that is not. That is more to do with the GST problems rather than this. So I suppose it should be, the margin should be contained at what they are having.
All right. So then if you talk about where we should be being extremely careful at the moment with the kind of run up we've seen in the rupee, would it be any of these exporters, the rice exporters, or the shrimp exporters, and would it be that pack? Would it be any of the metal names that we've been talking about? We've been seeing strong reactions come in there as well. And of course there are FMCG counters also that have an international play. What is the area really that you would recommend investors avoid at this point with the kind of weak rupee we're seeing?
See, at this point, so there are many companies where you will see are, they have exports. And there are many companies where they have some international debt in their books. So those companies where the debt is not hedged by their sales through exports are more prone to this kind of rupee depreciation problem, as well as for those companies where the debt repayment, the external borrowings that they have taken is due in a current financial year. So that's there. I would like to name maybe Adani Port. I would recommend people to avoid. There is a volume growth again for the company, but then it has some 50% exposure towards the on the debt side towards external borrowings. So that is one pack I would ask people to avoid.
All right, and very quickly on the positives then, of course IT, of course pharma, but how really would you be differentiating between these players? Any preferences where you see this kind of rupee tailwind really playing into their performance going ahead?
See, IT and pharma, obviously once you understand that the rupee will go up, most of the companies, they have given good margin forecast for going forward. And looking into rupee play, the whole pack looks good, except say Persistent, even NIIT Tech or MindTree. All these companies management, they have come up with forecast that the margins will improve, also because of their operating profits going up, operating business doing better, as well as the margin would be benefit because of the rupee impact. One company, say for instance LTI Infotech or Hexaware, these are the companies where there have been hedging going forward, and there are some wage hikes that these companies, mid-cap IT companies will take. So many, some of the mid-cap names where the rupee benefit would be curtailed by the wage hikes, would be say for instance your Tata Elxsi or even Zensar Tech. So these are the companies where it might not translate into big margins. Overall, I think it will be a good margins for most of the IT companies.
All right. Expect the rupee to play into good margins for most of the IT companies. Pharma as well expect to do quite well. But keep an eye on those mid-cap IT names that Vineeta just mentioned. Could expect to see some of the rupee benefit offset there by the wage hikes that are in the offing. Vineeta, we'll leave it at that. A pleasure speaking to you. Thanks very much for helping us really put in perspective all that's going on with the currency. That's Vineeta Sharma of Narnolia Financial Advisors.